What's up, man?
Hey guys, how's it going?
We're doing good. How are you?
Can't complain. I was just sitting back watching Jack. It's gonna be hard to follow that up.
Listen, everyone knows when the young wizard comes on, you got charts and you got good news for us. So let's get into the charts first, and then we'll get a little college update too, since we haven't done that in a while. But first, let's start with the UTXO realized price distribution, or URPD. Help us understand. We've been looking at this for a while now, and it seems like we're getting kind of a continuation of the existing trends.
When you look at this, there's several different clusters of volume essentially. So you're looking at different zones of cost basis for market participants. And right now we're kind of sitting right in between the cluster between 30K and 40K, and then also the cluster between like 43K and 50K. And so I'm looking for either that previous cluster to serve as support, or the upper cluster to serve as kind of short-term resistance overhead. But I don't think we'll stay in between for long. Usually whenever we get between these clusters, it tends to gravitate one way or the other. But that 38, 39K seems like kind of a really strong line in the sand there.
Got it. And help people understand, like, this realized price distribution. Basically, this is showing where people bought their Bitcoin. And so when we're below it, it's unlikely that they're going to be selling it because they'd be selling at a loss. And if we're above it, that they would actually be selling at a profit. Is that kind of the way to read this?
Kind of like the way I'm also looking at it is, if you have a zone of distribution above you, then that's going to serve as resistance, and then below support. And so you want to get as much of the volume below you as you can, because there's, just natural market psychology. As you move up, the overhead supply is going to be sold to an extent, because people look to take profits as prices move back up to where their initial cost basis is. So I just see it as areas for where price is going to interact pretty heavily, especially like when we get up to like the edge of one of these clusters. That tends to be where price has really heavy resistance, or when we get to the bottom of those, we see pretty strong support.
Got it. So let's also look at this net realized profit loss chart that we have in terms of we're back in kind of the green here. Help us understand what this is showing us.
This is just looking at the net realized profit loss, as it says in the chart, on every given day. So you look at all the profit and loss, and what's the net between the two? What's the when you subtract the two, what state is the market trading in? And so what you get is, from this week earlier, we had 2 consecutive days of $650 million of net realized losses. This is the first back-to-back consecutive pair of days that we had net realized losses since like early July. So we had a significant little sell-off that the market absorbed. A lot of that was driven by some de-risking behavior in traditional markets, and we'll also get into our SOFR metric, which is very similar. But you want to now see the market hold a state of profit, because that's basically saying that people are selling their coins from below, and the market's able to absorb that, versus on Monday and Tuesday we actually had supply from that was accumulated above where price was currently that we're doing most of the selling. So.
Got it. And then when we look at something like the futures open interest, what are you seeing here?
The big difference between the sell-off, 2-3 weeks ago and earlier this week, was you see earlier that first sell-off was just a complete drop-off in futures open interest, and that was because it was driven by a liquidation cascade. So you had spiking open interest, spiking funding rates, and then as spot began to sell off, that kind of triggered stop losses, and then it has this cascading effect on the market, and so you'll see that just completely dropped off in that first sell-off. This recent one, it seems a bit more controlled. It just kind of seems like risk-off behavior from active managers and traders. So I think there's a little distinguishing between the two that needs to kind of be acknowledged there, where this wasn't necessarily for selling. It just seems like it was correlation to traditional markets. We saw the S&P sell off. Bitcoin's been really heavily correlated to the S&P over the last month or two. So not surprising to see some de-risking in Bitcoin as well.
Got it. And then funding rates are negative right now, it looks like.
Yeah, and this is something we've talked about for a long time. This is the mechanism that pegs the perp contracts to spot. When you have prolonged negative funding, it's bullish. When you have prolonged positive funding, that's seen as a bearish thing. And so we kind of had these different regimes when we were in the summer in that little mini bear phase. Had prolonged negative funding, and then over the last month or two, we've had pretty prolonged positive funding, including a spike between, as you mentioned, that liquidation cascade 2 or 3 weeks ago. But over the last week or so, we've had just straight negative funding. So I want to see that continue, because that means either spots leading futures, or also the futures market is in aggregate, having strong demand to go short. So if you're going to have you want to see the price rally while traders continue to be in disbelief and are shorting that rally.
Got it. And then Sopra, which is, I feel like me and Sopra have been hanging out all summer long, buddy. Talk to me about what you're seeing with Sopra.
This is the net profit state of the market. Essentially, it's a ratio between all the coins trading on a given day. And so what you're looking at is you have this one line, and that's your neutral threshold. Below one is you're trading, in a state of loss. Above, in a state of profit. And so in bear markets, this can be a good metric to use to fade rallies, where whenever Sopra comes up and retests one, that's a good time to perhaps hedge yourself or take some risk off the table. And then in broader bull market trends, buying along these retests of one have served to be good kind of buy the dip opportunities. And so what you see is once again during that summer regime, very similar to funding being negative, we also had Sopra below one, came back to retested one as support. And then since then, we've been trading above that one threshold. But this week we actually dipped below, have recovered, but want to see now us want to now see us come back down, retest that one as support, and then kind of stabilize above one perhaps over the next week or two. We've dipped below one before in broader bull market trends, but what you don't want to see is us come back below one and then retest it and then get rejected. That's what you wouldn't want to see. So far I've reclaimed that state of profit, but now we're looking over the next week or two to see if we can retest it as support and then also stabilize above one.
Got it. And one of the things that I think you and I have talked about in the past, and you've been doing a great job of, is not just reporting on and kind of covering or analyzing existing metrics, but you've also been creating a number of new metrics. And one of those is this idea of an illiquid supply floor. So describe what is the illiquid supply floor? Like, how does it work? And then tell us what you're seeing in the chart.
Yeah, this is something I created this week with my buddy Matt. He helped me code because I can't code to save my life. Essentially what this is it's Plan B stock to flow model, but instead of using circulating supply, you're using illiquid supply. And so for anybody who's not familiar, illiquid supply is defined as supply held by entities who have very low spending history. So they take in a lot of coins, don't move many out. And then liquid supply is defined as entities who are taking coins in but moving a lot out. So those are like kind of the speculators in the market, and then highly liquid is probably like market makers, those kind of entities. But the illiquid guys are really the long-term investors, the strong hands that we all like to joke around about. And so essentially what this is trying to do is create a floor based off of Bitcoin's real-time scarcity. And so you'll see like we have dipped briefly below the model before, like in mid 2017. Very, very briefly at the bottom of 2018. And then also recently over summer, we went below, but we never stayed below briefly. And so although maybe, this model isn't perfect to the tick, you also see like after 2013, we came back down and retested the floor there. It has served as a good proxy, for perhaps where, long-term holders have set that price floor. You also see like, last year after September, we retested the floor and bounced right off of it into the bull market. So I think, with this being said, the floor currently sits at 38,300. When we had that correction last week, we came back down to like 39,500, I believe. So it came pretty close to the floor. But I think this is a good area to say, the long-term holders have kind of set the floor here, and it's a good time to kind of average in some buys. 38, 39K is also pretty strong technical support level, as well as you see some bids set down there. So like a little bit of confluence there. But yeah, that's essentially what the model is trying to do, is looking at the behavior of these long-term investors and trying to kind of estimate where they've kind of set the floor at.
Yeah, it's fantastic. So great work on that one. Supply shock ratios, we've been talking a bunch about this, and it looks like we've got kind of this bullish divergence that's playing out here. So what are you seeing on this?
Right. So we have three different metrics here. The blue one, which, I talk about this one all the time. This is the illiquid supply ratio. Essentially, this is just capturing the movement of coins from those liquid entities to the illiquid entities. So movement of coins from weak to strong hands. Pop, can you still hear me? Because I lost you on my screen.
I can still hear you. Can you see me?
I can see you, but it doesn't matter. It's all good.
Just keep going, buddy.
Because I'm just scrolling through it on my screen anyway. The red line is the movement of coins from highly liquid to liquid entities. So these are kind of the intermediate term investors. Purple line is the exchange supply shock ratio, movement of coins from, it's essentially a ratio of the coins available to be bought on exchanges to the amount of coins that aren't available to be bought on exchanges. And so right now, as you mentioned, we have this kind of bullish divergence. And this is very similar to the divergence that we had in like June or July. I remember, very vividly, like being in Hawaii, and me and Willie created this, and I did the episode. I remember one week, and I was like in the Hawaiian shirt when I created the metric. And this was back when we were like, crypto Twitter was just completely, desperate and like sentiment was garbage. And I remember we put this out and we were saying, yeah, there's this divergence and we're expecting some kind of supply shock to play out. People were like, on-chain is hopium, this is all nonsense. And then we had 10 straight up days. And it's interesting because that divergence was a little bit larger in terms of like how long it took to play out. And it was this kind of slow grind up. Whereas now the metrics almost had this impulse up while prices kind of had an impulse down. So I find that interesting. Just kind of the slope of the divergence is different. But yeah, going back, it's hard to find any times where price hasn't, over time reacted to the underlying fundamentals, although sometimes it can take time to play out, as we saw in the summer. Also, like this was a good leading indicator of the drawdown before, we moved out in May. I didn't have the metric at the time, but, if I started to see similar behavior where these metrics started to decline pretty heavily, then I would turn bearish. But for now, as you see in the chart, we just have this big impulse up while price is moving down. So, expecting that divergence to kind of play out in the intermediate term. Exchange flows have flipped slightly bearish this week, you could say. 4,586 BTC in aggregate put down to exchanges, which is about $190 million. A lot of these inflows came to Binance, especially on Monday and Tuesday when we had some of that de-risking behavior. But when you zoom out, you have these little down draws. But overall, we've been in an uptrend since mid-July. But if that changes, then we'll be tracking it. So.
What about whales? It seems like whales are just gobbling up every Bitcoin they possibly can find.
So in this newsletter, I tried to focus on some of the more macro trends and kind of zoom it out. But so I don't know the exact number that they bought this week, but you'll see, whales in a general sense buy into these early parts of the rallies, obviously because they're the big buyers. So they pretty much are the ones that are initiating the rallies. And then they also begin to trim their holdings into strength as retail steps in. So you'll see they bought really heavily between the two 2013 double pumps. They started buying into the bear market after 2014. Started buying in, the bottom of 2018, moving into that little mini 2019 bull run. Also, after COVID or right around COVID, they started buying heavily. And then they started selling, into the peak in the second half of 2013, into the strength in 2017. They sold the top in 2019. They also sold the top in earlier this year. So following the behavior of whales has been a pretty decent strategy, I would say. And they've started buying heavily since mid-July, and you're seeing just continued accumulation from them.
And then retail, it seems like they also are getting in the game as well.
And this is once again, very, very macro. What you see is kind of in the middle of these broader, bull runs, 2011 to 2013 double pumps, 2017. You see these large upticks in the supply held by retail. So what I'm doing here is taking all the entities with less than 10 BTC and then dividing that by overall circulating supply. So you're getting the portion of supply held by the little guys, essentially. And we call these guys the minnows. And what you see is, since like mid to late May, they've been buying in kind of macro sense. You're seeing that uptick that's similar to previous cycles, but it's not as, the slope isn't as steep. Like if you look at the chart, you see these really steep upticks. So I find that interesting. But yeah, nonetheless, you're seeing that same behavior that you see kind of in the middle of each cycle from these smaller guys.
Got it. And then if we skip ahead to looking at the HODL waves, kind of the last chart that we have here, how do you think about kind of, one, what is the HODL waves telling us? But then two, like, are there any takeaways or implementations or things that people can kind of say, hey, the chart's telling me this, here's what I should be doing?
So they're basically showing you the by different age brackets. So you have from 24 hours, day to week, week to month, et cetera, all the way out to 10 years, over 10 years. You're looking at the amount of supply that hasn't moved in each of those denominated cohorts. So you can, in a broader sense, and we've talked about this many times before, what you see is that long-term holders accumulate into weakness, they accumulate into the bear market, and they kind of lead us into the early phase of the bull market. As short-term holders begin to leave into these bearish phases of the market, and then they come step in and push the price up and basically buy the long-term holders' bags the whole way up into the bull run. And so you see that in short-term holder supply and long-term holder supply, but also here in the HODL waves. And so what you see is, like, as we head into the bear market, you see that the longer-term guys take up a larger portion of supply, move into the bull run. The shorter-term guys take up a larger portion of supply, right? And so right now, over 93% of supply hasn't moved in at least a month, which is an all-time high. And so I just look at this as another way to illustrate, these broader supply dynamics, where this isn't going to have an effect on price the next week or the next 2 weeks. But when we talk about what's going to happen over the next couple months, you pair this with a lot of the illiquid supply data, all these different ways of measuring it that we've been looking at. Talk about the illiquid supply RSI, illiquid supply shock ratio. I just created another metric using moving averages of illiquid supply. A lot of these different things. You look at long-term holder supply reaching all-time highs, and also illiquid supply is at all-time highs. All these supply dynamics are pointing to positive price action over the next couple months. And so, yeah, we may have these short-term derivative-led moves. We have these short-term, macro de-risking events that cause these short-term drawdowns. But when we talk about, what is Bitcoin's price going to look like in the next 2-3 months? We're talking about late Q4 into Q1. I think you're going to see much higher prices. As Jack said before I hopped on, you're seeing large buyers. You're talking about whales earlier, also these long-term guys. And then anecdotally, I thought for a while that a lot of the talk about institutions was perhaps, stretching the truth a bit. I've been working at a Bitcoin company for almost 2 months now, and I can just confirm anecdotally that all that stuff is true. And you see that in the data as well, right? We're seeing, like I said, these big buyers. So, I think we're going to see much higher prices over the coming months. And who the hell knows if we have these short-term drawdowns? I don't really care, to be quite honest. But I'll be following the data to try to help people be prepared to an extent in my newsletter. But that's what I'm really focused on is, where's Bitcoin's price going to be at in November, December?
Got it. And when you start to think about, if we just zoom out here, it seems like, one, you're still very bullish. Two, there feels like there's a bunch of large buyers that are coming into the market, many of them who I'm assuming that you and I both know that are unexpected or much bigger deals than people would think of. And then on top of that, all of the on-chain metrics continue to suggest that we're in this bull market, and the bull market is, kind of just getting started, really, to some weird way, not necessarily being near a top or headed into a bear market.
Yeah, I think some of these metrics are pointing towards the move out of a bear phase into a bull market. Similar to coming out of the bottom of 2018. See some similar patterns there. Also, coming out of the middle of the 2013 double pumps. I think when you're following these fundamental investor behaviors, you see these patterns, right? and you're starting to see the patterns that resemble kind of the early phase of another major run-up. And so to be quite frank, I would be surprised if we didn't see all-time highs by the end of the year. I mean, I think that's conservative, though. I'd be surprised if we didn't see all-time highs, by like mid to late November, to be quite honest.
So you think that we'll see it, here in the next, call it 6 to 10 weeks or so, is what you're thinking?
Maybe. I would say to be conservative, I would say indeed.
Okay.
Just to be conservative. Yeah.
So part of this is like less about like people should be trading on this information. It's more so like the data is what the data is today, and the data changes, which I think a lot of people don't realize either. We could go and 3 days from now go look at the data and it says something completely different, or there's been changes, whatever. So it's important to actually have an open mind to be willing to change your mind as the data changes, correct?
Yeah, for sure. Like one example is whenever I show like the liquid supply chart, like people always say, oh, well, a liquid supply is at the same level that it was in April. And it's like, yes, but then it started going down. And so once it started going down, you would turn bearish, right? I mean, you just follow what the data is telling you. And, the data has just continued to show stronger and stronger trends. Pomp, you and I have been tracking these trends when you're talking about whales and the liquid supply, long-term holders. I mean, we've been tracking these things since May. And I think that's part of the reason why people are like, well, this stuff is all hopium. It's like, I'm just reading you the data, right? The data is strong. And, as long as these trends continue, like my outlook will stay the same. Data changes, I'll change, my outlook for the coming months. But yeah, I think we're in a strong spot here.
Yeah, I think that makes a ton of sense. John, you got any questions?
Yeah, Will. So this morning there was obviously a pretty big sell-off because of the China stuff. What did you see on chain this morning?
Nothing crazy. I saw some coins being moved onto exchanges, especially like some of the. It's hard to generalize these exchanges and say they're certain like geographic locations, but like Binance, Huobi, OKX. I saw some inflows there, which perhaps represent Eastern buyers or Eastern sellers. But nothing like crazy. I think it's just another short-term drawdown. I saw a bit of liquidations this morning. Nothing crazy. It just seems like the market overreacting a bit to news. We've seen China ban Bitcoin 12 million times. I don't think that unless there's some news that I'm missing, I don't see this as any different than that. Yeah.
Any other questions, John?
No, it's good to hear. All-time highs coming soon.
I love it. All right, Will, what's going on with college? Are you still enjoying it, even though you're not going to classes, or what's up in life?
Yeah, man, I'm loving it here. I started working in Blackberry almost 2 months ago now, so I like all the people there. Having a good time. Kind of having my own schedule. And yeah, having some fun, of course. It's funny, like this is a little off topic, but you're having all these young guys on like that, are around college. And you talk to Dylan, right? And Dylan's similar to me. He dropped out way before me, but he lives around all his college buddies. And he's just like getting all the benefits of being in college, and he's not even in school. And he just had Jack on. And how old was Jack? Like 26, 27 or something like that?
27, I think.
Yeah, okay. So it's like, boomers, watch out. All the young guys are coming. I think about this a lot in 15 or 20 years, even if, which I think just because of what's going on with macro, like Bitcoin's has a really strong setup for the next 10 years. But, even if that's not the case and something unexpected happens, like over time, the Zoomers are going to choose to denominate in Bitcoin. And like over time, the boomers are going to retire. We're going to become the predominant earners in the economy, and we choose to denominate in Bitcoin, and so I think that's a trend that is just not going to change. You're going to continue to see these older guys, whether it's retire or like, not to be grim, but as they move into nursing homes and die off, like over time, the younger guys are going to come in and replace them, and we're very savvy with technology, and we understand this whole concept of digital scarcity. And so, Bitcoin is just inevitable. Like, meeting all these other young guys over the last couple months, and, you see Jack, like, Jack's like a big inspiration, just what he's done. Especially he was in Bitcoin way before Bitcoin was a big. I got into Bitcoin in 2020, so by then Bitcoin was already a pretty established asset. Jack got in Bitcoin years ago, and seeing what he's really done is pretty inspiring for a lot of the other young guys out there. I think a lot of us look at this and say, Bitcoin is so new, and you look at the TAM of Bitcoin and just where it is now simply, and there's so much upside in that rather than going into boomer finance and all the edge has been extracted from the market. You just get basically be a normal analyst like every other person, and you come into Bitcoin and I get to create new metrics and basically have like X-ray vision on the market, unlike anything that you have in traditional finance. I mean, the opportunities here, whether you're interested in analysis or you want to build stuff. I mean, just look at Jack. He just decided he wanted to build something from his closet, and he just got it integrated with Twitter. So I think for a lot of these younger guys, just hopefully people see Jack especially, but also guys like me and Dylan, and like if you're young out there and you want to get involved in Bitcoin, just go for it. Just get involved. Just start putting out content, and the community will recognize that. I don't think anybody in the Bitcoin community cares about how old you are, what you look like. I mean, we've got people with like anime avatars that are like multi-millionaires in the space. I mean, as long as you're putting out like quality content on Twitter, it'll get recognized. And so I don't know. I just kind of wanted to use this to just encourage any of the younger guys out there to like go ahead and get involved. Like, don't be hesitant to share your thoughts and just get in there.
I always tell people that the future is created and built by young people, right? It's not people who have their minds hardened to the past or believe they know the answers to everything. It's always built and created by young people. So I think your message is dead on. All right, so we've got a whole bunch of stuff we're going to go over next week. We're going to have you back on Friday. Any weekend plans you got? That's all you had to say. No, stop. You have fun. Stay safe. Don't do anything I would do. And we'll talk next Friday, buddy.
Yes, sir. You guys take it easy. Thanks for having me on, as always.
All right, later. What's up, guys? Bang, bang. Thanks so much for watching the Best Business Show today. If we're going to be the best business show, we obviously need the best partner. That's why the exclusive sponsor of the Best Business Show is SoFi. They're an all-in-one platform that allows you to invest in all kinds of different assets, including stocks, ETFs, crypto, IPOs, and they even have an automated investing function, if that's your thing. So before we start getting after it again, make sure that you go download SoFi, you get an invest account, and when you make your first crypto trade, regardless of what you buy, they'll give you $10 in Bitcoin for free. It's that simple. Head on over to SoFi.com/Pomp to get started today. Thanks so much for watching, and I hope that you come back and watch more of the Best Business Show tomorrow.